Welcome to TradersArmy.com, defending your right to build wealth and preserve capital for generations to come. Good morning, everybody, and welcome to the Friday morning edition of the Daily Market Commentary. I am your host, Chuck Fulkerson. Hope everybody had an amazing trading day yesterday. For those of you new to the channel, do me a favor, click that subscribe button down below. For those of you that are returning, leave a comment on the channel, leave a like. It would be much appreciated. So let's dive in. S&P this morning, we're up 31 points. Big moves in the overnight sessions. However, most of it's just a retrace of yesterday's movements. So for those of you that are Traders Army subscribers, yesterday was our live trading room. And in our live trading room, we had looked at a potential reversal at the gap fill area. That trade actually was a confirmation style entry. And the reason we took the confirmation style entry is because both the Nasdaq and the Russell yesterday had kind of come through those gap fill areas. So when we were looking at the trade yesterday, that gap fill area in the Nasdaq, let me pull that up here, the gap fill area in the Nasdaq had already been violated. And so we decided that it was not, as high probability unless it was a confirmation style entry. And we got a really nice move out of that level. It actually came down and hit target 1 within the first hour or so, and then hit target 2 much later in the day. Although I will tell you, for most of us, we probably got stopped out on this big pullback, moving your stop to break even or moving your stop to to lock in some profits. So now we've gotten a little bit of a move up. Now the move up that we've gotten in the overnight sessions has been due to some news out of China. We've got the jobs number coming out this morning, so there is a bit of movement this morning that can cause some things, but we're still holding strong on our potential breakout above 25.20. That level has really held. I mean, that's been like a strong line in the sand. And if that level does indeed continue to hold, I think that we could see a nice breakout out of that level. Now, we'd need to see a little bit of basing before the level in order to take an entrance. Now, on the 4-hour chart, which typically is what tells me am I a buyer or am I a seller, I actually do technically have a lower swing low and a lower swing high, and we've kind of rolled over. We had talked yesterday and even on Wednesday on the Daily Market Commentary about the momentum waning on the 4-hour chart. So that 4-hour chart momentum has definitely waned, and we're definitely starting to see a bit of a rollover. So I would be looking, if I'm just looking at the 4-hour and nothing else, I would be looking at a candle-to-candle short below this candle's low. So obviously this candle's not closed yet, but I would be looking at a candle-to-candle short below this candle's low simply because that's the setup that price is giving me. If I just use the 15-minute chart, then the 15-minute chart says, hey, prices are going up. We're in a bullish move, but my momentum is definitely waning. If I throw my momentum indicator on here, you'll see that my momentum is waning as price is continuing to rise. And so I do need to take momentum into account when it does show itself and rear its pretty head, if you will. So if we get a pullback, I think that a good target for a pullback would be this 2461 area. That's not a great time of the day in order for me to institute a new long. However, I think that's a good target for a pullback for today to pick up a decent amount of points on the way down if price does indeed continue its move down. From kind of, we see that momentum. Now, be aware, obviously, of news announcements as they come out today. Looking at the NQ, we see a very similar price pattern, that price pattern that we're seeing in the NQ. We are definitely seeing a bit more weakness here in the Nasdaq, but, the price target area on this, if you did get short, would be around 62.10 as there's plenty of room for price to kind of continue its fall. We'd have to look a bit higher to this gap area way up here as our next kind of reversal to the short side for a reversal trade. Now, when I look at the breakout long positions, the NQ does have that 6,400 whole round number level to be aware of. Moving on to crude oil. So in crude oil, we had a breakdown below 44.40. Price didn't get there, but we did actually in the overnight hours have a really nice move higher. Now, this is not formed at a great time of day, and this is kind of a retest of this area here to the left. However, right in here, right around the this old area of resistance, this could be a decent opportunity to get long. Now, what I do like is that we had this big wick up and then we pulled back down. So there's a fair amount of price action in there. It doesn't look like it, but wicks do matter. Wicks matter a lot when it comes to price because a wick tells me where price has been, and it's a shadow of where price has gone. You know, the analogy I used to use when I would talk about a wick is like footprints in the snow, right? So if I want to know if the mail has come, but I don't want to walk outside in the snow because it's cold and it's terrible, I don't have to know if the mail's come. I can look outside and see if my neighbor has walked to his mailbox because I can see his footprints. That can tell me where he's been. Think about the wick as footprints in the snow. It definitely tells you where price has been. It may have retreated from there, but we know it's no longer there, right? So price rallied up, came back, and then we got to move higher. So inside of here could be a decent little reversal. So keep an eye on this area for later today to see if we get any sort of a turning point out of this zone right through here. Now I'm going to make that a purple line because purple lines are 15-minute charts, which means they're slightly lower probability. Okay. Next, gold. So in gold yesterday, I actually anticipated a potential reversal off of this little 15-minute level as we were in our session. I thought, you know, if we break down out of here, then this could be a reversal. But this has become a fair price value area where price has popped up, and we're actually getting a little bit of a run from that area as of now. So I'm going to remove this line as we've not really got much movement out of it. But when I look at this on a 4-hour chart, the thing I was looking at was remembering that our momentum on the 4-hour was waning a little bit. And so was there a little bit of an opportunity to get short up here, you know, on some of these individual levels is kind of what we were looking at yesterday in that 15-minute time period. And so price has now come back down to an area that I thought we may get a little bit of a breakdown from, and we've kind of popped up into it. So I think that still is a potential move down, another leg down. When I look at this, I really come down into kind of these areas here as good turning points and possibly price targets. And you've got a number of levels here kind of stacked on top of each other. So I've got to kind of highlight both of them in here. A good way to handle this is to have one level that is more of a confirmation style entry. So you could theoretically use one level as a confirmation style entry, and that would be the first level that you would touch, and then the second level would be certainly much more of a limit style entry, right? So meaning that I'm not going to get long until the first level gives me a confirmation style entry. However, if I come into the second level, oops, hit the wrong button. If I come into the second level, that second level then becomes more of a limit style entry. And that allows me to really control my risk much better. And if I want to take the higher probability, I go a little bit lower on that supply-demand equation. And if I want to make sure I don't miss the trade, I take the confirmation on the first touch. For potential long, I think there's some room to short it actually on the way back down. You could even possibly take a breakdown below this wick here. So taking a look at bonds and currencies for today, you know, I don't really want to dive too deep into the bonds or the currencies today, frankly, because we had a pretty strong gap yesterday that set up a number of different trades. But starting, you know, kind of at the bonds, I don't want to dive too deep into them, frankly, because there was, I'll call it an aberration of price movement, and sometimes those things just occur, and they typically wipe themselves out pretty quickly. So in the bonds, my 4-hour is definitely telling me I'm more apt to be a buyer than I am to be a seller when it comes to my big picture trend. This is a pretty nice pullback that we've gotten in this level here of the bonds. And so that pullback that we've gotten, you know, I think that this could, much like the Nasdaq was a candle-to-candle potential on the 4-hour, I think so too is the ZN, which is our 10-year note, the bonds on a 4-hour, you know, kind of candle-to-candle style. If you want to go down to the hourly chart, we don't technically have a reversal point here yet, and that's why I would use the 4-hour. It's really just a very nice pullback to a pretty strong level. And that's kind of what we've seen in the bonds so far. In the Aussie, yesterday I had looked at a confirmation style entry when price kind of came back into here. We did come into the level and then pop out of it just a smidge. Let me actually zoom in on this just a hair. But the U.S. dollar had not reached any demand. So when the U.S. dollar doesn't reach demand, but I've got these equities reaching supply, it's a little bit more of a risky scenario. And so that gap was almost, was filled right away, and price continued to trade right through it. So what am I looking for today? Well, our chart on the hourly chart is definitely going up. On the 4-hour, it still tells me to be a seller. However, I don't have a higher swing low or a higher swing high yet. So the 4-hour is still telling me that I'm more apt to be a seller than I am to be a buyer. We do have an area here of resistance that I think could be a bit of a bull trap. An area of resistance here that could be a bull trap, which is kind of what happened in the S&P short yesterday. And that bull trap being that price would break above resistance, a lot of people would start buying, and there's a little bit of a supply area up above. So just kind of keep that in mind. In the euro, I looked at two levels yesterday. One was this area right here. Price came right through there. This was our lower probability level. This is a higher probability area, somewhere way up in here. Time of the day is better that this one was created. Now, I don't like the fact that we're losing momentum coming into it, but there could be a reversal. Lots of upper wicks here. This price action's a little bit more hairy in order to pay attention to. Canadian dollar, by the time we looked at it yesterday, it had actually already filled that gap and continued it's had its continued strength to there. It's coming to a potential reversal point. Now, this is a confirmation style entry because we've come really close to it in the past, and we want to be aware of that level. Last but not least, Great British Pound and Japanese Yen. The Great British Pound is closing in on our 15-minute confirmation level. This is the same level that we talked about in the daily market commentary on Wednesday. That level, when I look at the 15-minute chart, you can see has already been tested once, and it was tested by this wick right next to it. I'll zoom in on that a little bit. I'll zoom in on it again. This wick right here was the retest of the level, that one gray candlestick that's that is simply a what is that? A hammer? A gravestone doji. I think that's a gravestone doji. Whatever it is, I think it looks like a lightsaber doji. So that's a lightsaber doji. Price came into the level and then came back down out of it, thus reducing the probability the next time around. So, and then also the Japanese yen, we got a potential buy opportunity down in here on the yen futures. Obviously, if you're trading the currency pair, that would be reversed, right? That would be reversed because the currency pair is going to be reversed in there. So, looking at the weekend, understand your rules about holding things over a weekend. Everybody's got their own rules about whether or not they hold trades over a weekend. If you do hold over a weekend, understand that you do take an additional level of risk. I've actually been pretty hesitant to hold over weekends recently in futures. In our individual options positions, absolutely, I don't mind holding over a weekend. It's really more that I'm concerned about earnings. So keep these areas in mind. If you got any questions, please feel free to reach out, support@tradersarmy.com, and then we will be back on Monday morning with a daily market commentary. Have a great weekend, everybody. See you soon.